Really tell them how I feel, they wouldn't stand a chance. If I really tell them what I thought, they wouldn't be my man. I've been taking drugs to the face, like again. If you never felt my type of pain, then you wouldn't understand. Let me tell them, I come from the bottom where
I bet. So the first thing we're going to be going over is how the trading ideas work, right? If you've taken a trading idea from the chat, yeah, drop one in the chat. If you've taken a trading idea, drop one in the chat. I'm going to show you guys how they work. A lot of people don't understand, and I was speaking about this yesterday. A lot of people don't actually understand how the trading ideas work, right? I want you guys to understand that the trading ideas are set up so you're going to lose more than you win, but the wins will always be bigger than the L's. I want you to understand that, right? As traders, you are never going to win more than you lose, right? So it matters. It matters how much your wins are. Your wins must outweigh your losses every single time you trade. So this right here, these three green boxes, they're examples of trades, right? Let me zoom in a little bit. They're examples of trades. So as you see right here to the top, it says 2K, it says 2K, it says 2K, it says 2K. These are 4 different trading ideas. Let's pretend I sent out 4 different trading ideas in the chat right now, BPO alerts, right? The first trade, the take profit is 2K points, 2K pips, right? So we're going for 2K pips. That's our target, right? But we're risking losing 49 pips. We're risking losing 49 pips. So when I first got started, I didn't understand this. I would take a trading idea, right? Let me actually delete this. I would take a trading idea. And, we'd go in profit. I'll be happy. I'll see a blue screen. Let's go. I'm in profit, right? And then out of nowhere, right, I check my phone. Boom. Stop loss was hit. I lost 49 points, right? Let me write that down on my calculator. I lost 49 points. So I took an L. Right? And now I'm mad. Like, damn, my first one was an L, but it's cool. I'll make up for it on the next trade. I take the next trade, right? The next trade goes in profit as well. And then I check my phone again. Boom. SL's hit, right? Yo, somebody send the trading in BPO real quick for me. Somebody send that in BPO. Right? So the first trade we sent, right, it'll go in profit a little bit, right? And then out of nowhere, it'll reverse and it'll hit stop loss. So you lose your first trade, but it's your first trade. It's a little loss, 49 points. You're not too worried about it. So you take a loss the first trade, right? They send out another trading idea, whether it's XRP, whether it's BTC, right? And you take the same exact trading idea. This one goes in profit a lot more. You're happy, right? And then it comes down, boom, it hits stop loss. So that's you're 0-2 right now, right? You lost 49 points the first trade. You lost 49 points the second trade. So now you're down a total of 98 points. 98 pips in the market. You're 0-2. You're like, damn, okay, bet. I don't know what's going on. I lost my second trade, right? I don't know if I want to take the third trade, right? The fear starts to kick in. Your account is not looking too healthy, right? You go ahead, you take the third trade because you joined this opportunity to make some money. You take the third trade, right? This one comes very close to take profit, very close. You have the green alert on your phone. It's about to hit it, and then you check your phone again. Boom, another stop loss hits. So now you lost another 49 points. You're down a total of 147 points, right? You're 0-3 trading. Now in your head, you're like, yo, these people suck. These trading ideas suck. I'm not taking the next one. I lost 3 in a row. I will not take the fourth one. I keep losing money, right? This is where I would mess up. And I didn't understand this for the longest, right? I'd see all my friends making mad money, right? And I'll be like, how are they making money? We just lost 3 in a row, right? Drop a 1 in the chat if you've seen people in the chat making money, and you're like, how are they making money? I lost some trades, right? How are they making money? I just lost some money. It doesn't make sense. Everybody's dropping profits. Everybody's in blues, but I just lost money on that trade. That doesn't make sense. So what happened was we set another trading idea. You might have ignored it because you lost 3 trades in a row. You're mad right now. You didn't see the fourth trade. But what happened was the fourth trade actually came up and hit take profit, right? But this isn't a take profit for 49 points. We were aiming for 2K pips in the market. So we have one trade that hits for 2K. So let's do some math. I lost 3 trades in a row, right, which is a total of 147 pips. So let's put in 2,000 on my calculator because that's what this one hit for, and let's subtract 147, right? So I took 4 trades, right? I took 4 trades in a row. 3 of them hit stop loss. The fourth one hit take profit, right? And the fact that I went for 2K pips, my win out here, it outweighed every single loss that I took. So at the end of the week, I'm still up 853 pips, right? Due to the fact that I took every single trade, right? So when I first got started, some of you guys might be doing it too. You might not take every single one because you're hitting stop loss, not knowing that all you need is one trade to hit. If one trade hits, every single loss we took is outweighed, right? So you outweighed every single loss, but then overall, you're still in profit because we're aiming for high take profits. Understand, when we send out these trading ideas, right, the stop losses are very low. You might lose 30, you might lose 40, you might lose 50, but if it hits take profit, you're making, 200, you're making 300, you're making over, $90 trading, right? So that's something that, stood out to me, and I think it's very important that you guys all know that, right? Take every single trading idea that is sent. It doesn't matter if you lose 3 times in a row, if you lose 4 times, you just need one trade to hit, and you will make up for every single loss that you took, right? So now I'm going to go over leveraging, right? Because I know a lot of people have been over leveraging. So right here it says do not over leverage. Let's go over your lot size. When it comes to regular Forex pairs, USD JPY, USD CAD. Hold on, y'all. Give me 1 second. Hold on. You have USD CAD, you have USD JPY, you have, the Japanese yen with the Canadian dollar. You have all these Forex pairs, right? This is how much you're going to use for your lot size when you have these Forex pairs, right? If you have $10 in your account, let me make this bigger. If you have $10 in your Forex account, the highest lot size you will drop is 10 cents, a 0.01. So for those that don't know, a 0.01, right? A 0.01 is equivalent to 10 cents per movement in the market, right? If I enter the market with 10 cents and the market goes up 3 points, I made 30 cents, right? If I enter the market with 10 cents and the market goes up, let's say 10 points, I just made $1, right? I made $1, 10 cents per movement. So if you only have $10 in your account, the highest lot size you will drop with regular Forex pairs, regular currencies, is 10 cents, right? If you have $20 in your account, the highest lot size you will drop is 20 cents, right? If you have $30, the highest lot size will be 30 cents, right? And let me actually go over this very quickly as well. Hold on, right? You can enter a trading idea multiple times. So right here, it says if you have $100 in your account, the highest lot size you will use max. You will not pass it. If you pass it, it's over leveraging. It's $1, a 0.1, meaning you'll make $1 per movement. But when people mess up, right? I've seen people blow their accounts thousands of times. And I'll tell them, listen, you can only use $1 investment. They'll send me a screenshot of their trades, and they took $1 investment 5 different times. So they took that dollar 5 different times. That's over leveraging. The highest investment possible is $1. So if you want to take multiple trades, you got to understand, you got to divide the lot sizes, right? If I have, for example, let's use the example that's written down. If I have a $90 account, the highest investment I should be using is 90 cents, 0.09, 90 cents per movement, right? So if I have $90 in my account, I can enter multiple different trades. I just got to cut that lot size in half. So if I have 90 cents and I want to enter 3 different trades, what I would do is instead of entering 3 different trades with 90 cents each, I'm going to cut that into 30 cents each. 3 different trades, 0.03, 0.03, 0.03, because 0.03 times 3 is a 0.09. So my lot size would be equivalent to my max, as opposed to me entering the same exact trade 3 different times with 90 cents. And when I have to pay the broker a fee, when the market has a little pullback, I get kicked out the trade. I lost some money. My account couldn't handle that drawdown. It couldn't handle the pullback. It couldn't even handle the spread, right? And for those that don't know what spread is, it's when you're paying the broker a fee. Every time you enter a trade, well, most times you will be negative because you're paying the broker a fee. You have to understand that, right? You have to understand that. So if you want to enter a trade 3 different times, you'll enter them with 0.03s, all 3 of them. So that's equivalent to a 0.09, right? If I have $80 in my account, the highest lot size I should use is a 0.08, meaning if I want to take multiple trades, I can take 2 of them, 2.04s, right? Or I could take 4 0.02s, because that would equal up to 0.08. If that makes sense, drop a 1 in the chat. If that is making complete sense, drop a 1 in the chat. I want to make sure you guys are understanding. If it's not making sense, let me know, right? And I will go back over it, right? But if this is not making sense, drop 1 in the chat. This is something everybody must know. I've seen it happen way too much times, right? Our goal, we got started with this business, this opportunity to make money, not to lose it. So you got to make sure you're taking care of your capital, right? You have to take care of your capital. So now I'm going to go over moving your stop losses into entry. And a lot of people do it, but a lot of people don't actually know what it means. So I'm actually going to, hold on. I'm going to bring up a couple lines very quickly. And I'm going to show you guys exactly how this works, right? So this line right here is my take profit. I'm going to make it green. That's my take profit, right? This red obviously will be my stop loss. Hold on. This is my stop loss. And then this, actually I already have a line there. I'll just change the color. This black line will be my entry, right? So you probably hear this term a lot. Move your stop loss into entry. Rue, what does that mean? Why does everybody say that? When we take trades, why do they say move your stop loss into entry? Let me zoom in a little bit, right? So this is my take profit. This is my entry price, and this is my stop loss. Meaning, right, if the market comes up, it hits this line, this green line, I make a lot of money. All the money that I made I get kicked out the trade with all the profits that I make. So in other words, you want the market to move towards your take profits. They're your money makers. If you didn't know that, write it down. Your take profits make you money. Take profits make it so you don't have to stare at your phone 24/7. You place a trade, you put your take profit in. Once the market comes up and hits this area, right, this price right here, 55712. Once the market comes up and hits that area, this price, you get kicked out with all the money that you made. It makes it so you don't have to actually check your phone 24/7 to exit the trade yourself. It'll kick you out with profits. Take profit, right? Opposite of that is stop loss, right? Once you lose a certain amount of money, you're going to get kicked out the trade to protect you from losing even more. If I wanted to buy the market here, I predicted a buy, but the market decides to sell, I'm going to get kicked out with a small loss. So every time, like there's a saying, it says, every time the trade is blue, it's on you, right? Every time the trade is blue, it's on you. So I'm going to break that down. So let's say I place a buy. This is current price. The market comes up a little bit. I'm in blue. My trade is in profit, right? What you must do, once you're in good profit, I say 15 to 20 pips. 15 to 20 pips. What you want to do is, right, this is the current price. Market started right here. At entry, I'm in profit because I bought, meaning I want the market to go up. I'm in profit. What you want to do is you want to move your stop loss, this red line now, into entry, exactly where you entered. Like I said, your stop loss is going to kick you out the trade, right, once it hits this area. The stop loss is going to kick you out once price hits this area. So think about it. If I enter this trade right here for a buy, right? If I enter this trade for a buy and the market decides to reverse, I'm going to get kicked out and I'm going to lose money because it hit my stop loss, right? And if for a trade to go negative for a buy, it has to go underneath your entry, right? If you're buying, in order for you to go negative, the market has to go underneath where you entered for a sell, right? So if I'm looking for a buy and the market reverses and it hits this area, I lose money, right? I lose money because this is below my entry. It's negative. But now, if I move my stop loss to entry, once the market does decide to reverse, I'm going to get kicked out, yes, but I'm getting kicked out exactly where I entered, right? Exactly where I entered. So I can't lose money on the trade. Why? Because I put my stop loss to kick me out once the market reverses at my entry. I can't lose money on this trade. I can't, right? Does that make sense? I cannot lose money, right? I can't because my stop loss is at my entry. If I put my stop loss a little under, if it reverses, I lose a small amount. But if you move your stop loss to your entry, when that market decides to reverse, you can't lose money. You can't because it's at where you entered, right? And now to bring, like that's why I say when the trade is blue, it's on you. You must know and understand when to move your stop loss to entry, right? Once a trade goes in decent blue, you should never lose money. If you do, you're not disciplined, right? If you do, you're not disciplined. You should know when to move your stop loss into entry, right? Now let's take it a step further. Moving your stop loss now into profit, right? Because I just went over how to make a trade risk-free. Risk-free, meaning you are risking nothing on this trade here. My trade is in profit. My stop loss is at entry. This trade will either hit my take profit or it'll reverse and hit my entry and I lose nothing. It's risk-free. I can go to sleep happy. I know I cannot lose money on this trade. I can either make a lot of it, right? I can either make a lot of it hitting my take profit or I can lose nothing, right? My trade is risk-free. You're going to see in the chat box, yo, make your trade risk-free, move your stop loss to entry, understand where your entry is. Your entry is right here, 53370. All you do is you go to MetaTrader, you modify the trade, and you put your stop loss into entry. You move your stop loss into entry, the trade is now risk-free. So now let's take it a step further, moving your stop loss into profit, right? Let's say the market goes up a little more. Right now, I'm in good profits. I'm in great profits now. I'm positive, you know, let's say $30, $40. I'm in good profit now, right? Now you don't want to make the trade risk-free no more because this is a win or lose. This is a win or lose nothing situation, right? Your goal every single trade is to make a trade a win-win situation. No matter what it is that happens, I am going to win. Win-win situation, right? Your goal is to make a trade a win-win situation. So now once the trade is up in profit, what you do now is you don't leave your stop loss at entry. You move it now into profit. And the numbers are always going to be to the right, right? You'll move it into profit. So now every time the market goes up, what I do is we trail our stop loss. I modify my trade. I move my stop loss up a little more. Every time the market goes up, so does my stop loss. Every time the market goes up, so does my stop loss. So think about it. When the market does decide to reverse here, when it does, boom, I get kicked out in profit. My stop loss is kicking me out the trade. Instead of me getting kicked out at entry and losing nothing, I'm going to get kicked out with money now because everything above my entry is profit. So now I got kicked out in profit, right? The market goes up some more, my stop loss goes up some more. So when this market reverses, it'll either hit my stop loss and I still make money, or it hits my take profit and I make even more money. It's a win-win situation. Your goal is to make every single trade you take a win-win. Once that trade is in good blue, that stop loss should move in blue as well. This trade is a win-win situation. If that makes sense to you guys, drop a 1. Right? If that makes sense, just drop a 1. Hopefully everybody is following along. We good. Now I'm going to go over calculating pips, right? For those that don't know what pip means, right? Pip is how you measure the movements in the market, right? It stands for point in percentage. Point in percentage, right? So it's how you calculate the movements in the market. We as humans, we walk in steps, the market moves in pips, right? So the market might be up 10 pips, that's 10 points. The market might be up 15 pips, that's 15 points, right? So let's say I place a trade. Let me make this a little bigger, right? You want to always be able to calculate how much money you're up on the trade. Someone might ask you, hey, Rue, how many pips did you catch on that trade? Yo, Rue, how many pips is it in profit? It's simple. All you have to do is division. You want to ask yourself 2 things, right? How much am I up on the trade, right? And what did I enter the trade with? If I entered a trade with a 0.02 investment, 0.02. And for those that know, how much is a 0.02, right? Without cheating, how much is a 0.02? What investment is that? Drop it in the chat box. What lot size is a 0.02? How much is that equivalent to? 20 cents, exactly, right? So if I enter the market with 20 cents, if I enter a buy for 20 cents, and then, right, I'm up, let's say $10. I'm up $10, right? You must be able to know how many pips you're up right now. So what you do is you go to your calculator, you'll type in $10, right? You're up $10 and you want to do some math now. I entered this trade with $10. I invested 20 cents. You're going to divide by 0.2 because that's how you write a calculator. I mean, that's how you write 10 cents on a calculator, right? Without cheating. I'm dead, right? You'll do the math. You're up 50 pips, right? You're up 50 pips. I entered the trade with 20 cents, my fault, right? The market went up $10. I make 20 cents per movement. You're going to divide how much you're up by 20 cents, and it'll tell you how much you're up, right? So that's how you're always going to find it out, right? You might be up, let's say you invest, 50 cents on a trade, 0.5, right? That's my fault. That's $5, right? 50 cents. Let's say I'm up $60. I'm up 60, right? So what you do is you type in $60, you divide by 50 cents, and you'd be up 120 pips. That's how you calculate how many pips you are up in the market, right? And when we send out these trading ideas, I want you guys to understand that there's always going to be an entry number called. There's always going to be an entry. There's going to be 2 of them. Entry number 1, entry number 2. Your goal is to take the trade within 50 pips, right? So they might say, they call out a buy at 0.55. At 0.55, you got to make sure you take that trade as close as possible to the entry number 0.55. Because if you take it too late, the market already took off, right? So for example, someone drawn on the screen. I bet. So let's say I'm up. Let's say this current price right here. This right here is at 55 cents, right? It's up at 55 cents. Let me actually, boom, right? They say place a buy. Picasso might send a trading idea. Place a buy at 55 cents. So you want to enter as close as possible to Crypto Picasso. You want to take his entry because then you'll enter exactly where he entered. If he says enter at 0.55, you don't want to take the trade that's take profit is right here, right here. You're not going to make much money, right? You're not going to make much. Your goal is to take it as close as possible to this. And think about it, right? The broker's going to charge you more money if they know you're going to make money off the trade. If the broker knows that Bitcoin is going to fly through the roof, right, for a buy, and you're trying to enter right here, in order for you to enter this trade, he's going to head crack you. He's going to tax you, right? He's going to charge you way more money than what you actually have to pay to enter the trade. If you would have entered the trade right here, you would have had a low, hold on. You would have had to pay a low fee, right? The fee would have been very, very low, as opposed to you trying to enter up here. And now you paid the broker a big fee. You're in big drawdown. And in order for you to make money, in order for you to clear that fee, the market has to even pass this area, right? There's going to be times, right, that you take a trading idea. Everybody else is in blue and you're still negative because you entered way too late, right? You entered way too late. So you got to make sure you take the trade as close to this entry as possible, right? Because like I said, you're going to be paying the spread. And the spread is a fee that the broker charges. If you enter up here, the broker knows it's going to continue to go up. So he's going to charge you some more. He's going to charge you some more, right? And now while you're up here, you're negative up here, you enter too late, it hit take profit. Everybody that entered right here, you know, made $100, made $200, $300, made $70, while you probably made 30 cents, or you ended up out this trade negative 30 cents because you entered way too late. And then when the market came up here, right, you just cleared the broker fee, right? You just cleared the broker fee. So now what I'm going to go over, right, there's a video I want everybody to watch whenever they get the chance. For those that have the DCX package, Nick Gomez, he has a video, right? He has a video called Risk Management under his favorite sessions, right? And I want everybody to hop on DCX. You go to Nick Gomez, click on his session, go to favorite sessions, his favorite recordings, and he has a video called Trading Plan, right? A risk management video similar to this. It goes more in detail. I want everybody to tune into that, right? It's going to help you. It helped me a lot understand, especially with crypto, because crypto doesn't move normal, moves way faster than Forex pairs. Forex pairs might move max 70, 80 pips a day, right? Some might move 100, right? 78 pips a day, right? Bitcoin, cryptocurrency, you look at XRP, Ethereum, they're moving 500 plus pips a day, right? So they're moving way faster, meaning you're able to lose way more, but you're also able to gain way more. So you have to be able to calculate risks, right? Your goal is to minimize your losses and maximize your wins. Like I said earlier, you're not going to win them all, but the losses are going to be so small that that win will clear all of them if you're using the proper risk management, right? So when it comes to XRP, I want you to understand, right? And I have a broker, I have Hugo's Way, and I have a referral link. So every time I send people my referral link, I can see how much money they're making every single trade. I can see how much money you're losing every single trade. So chances are, if you're on my team, I see what your trading account looks like, right? And a lot of you guys are not following this direction. I'm going to be honest. A lot of you guys are not. I can see what you guys are placing for trades. I can see how much you're making, how much you're losing, right? It's not looking too well. I'm going to be honest, right? So we got to fix up, right? I say XRP is 0.01 per 100 for a reason, right? Per $100 that you have in your account, you'll drop a 0.01. If you have $200, you can drop a 0.02 investment on XRP. Max. Nothing more, nothing less. I see people dropping 0.05s. I see 0.06s. And then people are wondering, why am I losing so much money? Right? You're over leveraging. That's what you're doing. You're over leveraging. You will not become profitable if you are over leveraging, right? Bitcoin, it moves very, very fast, right? It moves very fast. Probably the fastest moving pair, right? Bitcoin is 0.01. Let me actually fix this. It's 0.01 per $200 in your account. Meaning if you only have $400 in your account, you will only drop a 0.02 maximum, right? If you have 200, you will not pass 0.01. Right? Understand, most people aren't profitable when it comes to trading because they have a fear of missing out, right? You'll see people in the chats making $100, right? But you're not running your own race. You'll see people making all this money and you're like, damn, right? Damn. A lot of people are making too much money. I'm not making anything. Let me drop a big investment on the trade. Let me try to get rich overnight, right? And you lose all the money in your account, right? Run your own race. Understand, there's people in that chat that are making thousands of dollars, but they've been doing this for way longer. They have more experience than anybody. Right? So you're comparing your chapter 1 essentially to their chapter 20. They're making so much money because they've been doing this for 2 years. You just started a month ago and you're trying to compare your success to theirs. And now your account is at 0, right? Because you're trying to get rich overnight. Don't over leverage. Under leveraging, right? That's a thing. That's a thing. I've seen people trading for years, right? I've been doing this for like a year now. I've seen people that I first got started with that they're still dropping 0.01s on Forex pairs, and they're making $1 and sending it in the chat. You're not gonna do that, right? That's why I went over this, Johan, right? This is gonna keep you from under leveraging, right? If you have $50 in your account, you can drop anything under this, under 0.05, 0.04, 0.03, 0.02, right? 0.01. But I see people, right, that have been trading for a year now and are still dropping 0.01s with $200 in their account, and they're making $1, $2, right? Understand, you'll make $2, but you take another trade that it might hit stop loss for 3, right? So now you lost $1. You're negative $1. $1 is not gonna make you money. Like I said, we came here to make money. We're not here to make chump change. It's a part of the game, right? We're gonna start off making a little bit amount of money, but it's gonna as time goes on, you're gonna make more, right? And that's where residual income helps out as well, right? And I break that down a lot. Most people aren't going to see the results that they truly want to see unless they have at least $7,000 to dispose into the market, right? So if this is you and you don't have $7,000, you need residual income, right? You need to build the business and take that money and trade with it. Some of the best traders say the best type of trading is residual income trading, when you're residually trading, right? Because we are emotionally attached to our money. Right? If I work my ass off for $50 at my job and I put $50 into the market and I lose 10, I'm going to feel it because I worked my ass off for it. But if the company pays me $150 a week and I take that and I put it into my trading account and I lose $10, I am not going to care that much because I know at the next Friday I'm going to get another check and I don't got to do much for it. I hop on Zoom calls and I make money. I hop on Go Live and I make money. I don't have to clock in and flip burgers to make money, right? So when I lose $10, it's not going to hurt me that much, because I work one time for it and I get paid for it over and over and over again. So the goal for all 60 people on this call, we had 60, we have 57 right now, is to build residual income to make trading even easier. If you're trying to trade on your last, it will not work. You have to build residual income for yourself, right? We're not trying to tell you guys. Someone asked me a private question. So if you don't have more than $100 in your account, you can't get into pairs. No, Christy, I highly recommend if you have $100 in your account, you stay away from Bitcoin, right? One pullback, right, can blow your account. Right, drop a 1 in the chat if you've seen what happened yesterday at 4 a.m. to Bitcoin, right? Who's seen? Look where Bitcoin is at right now, right? Look at where Bitcoin is at right now. Crazy, right? It's currently at what, 48 cents? Bitcoin last night, I would say it dropped from what, 54 cents. It dropped from 54 cents, or maybe somewhere around this area, all the way down to 44 cents. Christy, if you had $100 in your account and you placed a Bitcoin buy right there, sheesh, that would have did you dirty. That would have probably blew your whole account. It dropped to 9K. Exactly, Nick. It dropped 9K. That account would have been gone. It would have been gone, right? So I'm going to be honest. We called out a buy for XRP last night because XRP moves with Bitcoin. We called out a buy. It was 4 a.m. Some people weren't awake. It dropped all the way down to what, 36 cents, right? Marv, are you on the chat, bro? Marv took an XRP buy last night at 4 a.m. and he made $1,000 in under 30 minutes because the market made a very, very big drop and the market always has to correct itself. So it went back up, right? Whoever caught that movement made a lot of money. So the fact of the matter is you want to make sure, right, that you have the proper amount in your account because you never know when these big moves are going to happen. You never know, right? Someone literally made $1,000 yesterday in 30 minutes. $1,000 in 30 minutes yesterday. Right, it was called out at 4 a.m. He took XRP. It started at 38 cents. He seen the big drop. He said, okay, bet the market is going to correct itself. It went all the way back up, right? So I have 5 minutes left on this call, right? I'm not going to take too long. I'm about to go over a trading plan with everybody. Drop a 1 in the chat if you do not have a trading plan. Who on this call does not have a trading plan? See all my football stuff. We're about to create trading plans. I'm going to drop this document in the chat, right? This is something that I like to use, right? So let's say I start my account with $100. Is it lagging a little bit? All right, we have a lot of people that do not have trading plans, right? You should not be trading without a trading plan. So let's say I start my account with $100, right? You'll type in the balance, your deposit, you'll click on enter, right? You can determine how much you want to grow your account by. I say anything between 5 to 7% every single day, Oh, my fault. 5%. It'll. What's going on here? This is 500. I have to put a decimal or something. Okay, bad. Hold on. Good luck, Stevenson. Okay. I bet. So let's say I want to grow my account by 5% every single day, right? It's going to tell you every single day how much money it is you have to profit, a daily profit goal. So let's say I start my account with $100. It's the same thing as a compound sheet. This one is for more Forex though. This one is more Forex, right? So I deposit my account with $100. Every single day, day one, I have to make $5. If I'm growing my account by 5%, I start with $100 every single day, right? I have to, day one, I have to make $5 trading, right? It'll tell you what lot sizes you can drop. If you drop a 0.01, right? Let's say you drop a 0.01, which is 10 cents. This is a little off right here, right? And take profit is 48 pips, right? 48 pips. You'll make about $4, right? You'll make about $4.80. 10 cents per movement. The market goes up 48 points. You do the math, right? Divide 48 by 10 cents. You will get about $4.80. It brings you pretty much close to this goal, right? Every day, it'll tell you what your lot size must be in order to achieve these percentages, right? So not only is it going to tell you how much money you have to make, it tells you what investment you can use to make this money or very close to it, right? So I start off with $100, right? My first day, I have to make $5, profit $5 my first day. It tells me what lot size I can use. I can use a 0.01 and aim for 60 pips. I can use a 0.01 and aim for 48 pips, or a 0.01 and aim for 100 pips, right? Most definitely, you're going to aim for 60 to 48, somewhere around there, right? So then your first day, you make $5. Understand, after your first day, you have to take the rest of the day to learn. Once you make your daily profit goal, don't get greedy. Because if you follow this trading plan, right, by day 60, you can have over $1,000 in your account, touching $2,000, right? 30 days, you can have, $400 in your account, right? So understand you have to compound. You have to understand how to compound. I will drop this in the chat. I'll send this all to you guys, right? But we're not here to get rich overnight. You're here to be disciplined. Follow a trading plan every single day, right? Day two, you have to make another 5%, which is $5.25. You can drop another 10-cent investment, catch 60 points in the market. Boom, your goal is met, right? But this will change. Your investments will raise, right? Let's say you're at day 22, right? You have $292 in your account. You have to make $13 trading. You can drop a 30-cent investment and catch 48 points in the market. You made your profit for the day, right? You made your profit for the day. Understand, you will not win every single trade. So you might make it to day 5. You make your money. You might take a loss. Instead of 127, now you have 111. You just type that in. Boom. We start from scratch. Day one, you have to make $5 trading. So you'll always be able to adjust this. And this just doesn't come with this. It comes with the trading institution, right? These are things you can tell yourself. I'm a successful, disciplined Forex trader. I enjoy trading to make profit. I never assume anything. I use positive words. Make sure you're in the right state of mind when you're trading, right? Law of attraction. If you're in a bad mood, you will attract bad results. Make sure you're in the proper state of mind. You can keep a journal for every single trade you take, the risk, the reward, how you were feeling, what confirmations you had, and how much you made. What was the result? I noticed when I was in a bad mood, I would always lose money. When my confirmation wasn't there, I would always lose money, right? So with that being said, hopefully you guys got some value.
Pain that you wouldn't understand, let me tell them. I come from the bottom where the chances ain't high enough. Talking to myself, my thoughts tell me I don't try enough. Roll another one to feel like I don't get high enough. Never could finesse me, everything I do is out of love.